Hello, everybody, and welcome back to the Dash Trader Newsroom. Target misses the target. Nvidia beats the street, but what comes next for the chip maker? So let's jump right in. My name is Michael DeJoy. I'm the Director of Educational Services here at Dash Trader. We have a lot to talk about today. First off, we have Target, TGT. We can see here on the chart, I mean, this is quite a miss. You can see here on the chart that I'm just going to bring up my laser pointer. You can see that the stock had a big move up to the upside on earnings last quarter as Target seemed to get their supply chain problems out of the way and, pretty much chopping about, not really going anywhere for a couple of months. But then this time, boom, supply chain problems reemerge. So, this is the story. This was Target's biggest miss in 2 years. This was their biggest earnings miss in over 2 years. Stock was down about 25 to 30%. But what's the real story behind this miss? Is it trouble at the ports as the company cited, or is it the problem actually that the economy is starting to slow down and the consumers are starting to get a little more conservative with their dollars? Um, or could it just be that Target's management just did not handle the problem at the ports well enough, and they overordered and they just generally misjudged demand? Because we don't see the same problem at Walmart. Walmart did, basically Target actually bought, more product than Walmart, and it's a smaller retailer. So there's definitely a disparity in what the size of the orders were for Target, in relation to Walmart. And that shows that potentially this is just a Target specific problem, or is this a broader problem with the economy? Now, jumping right ahead, we have one big earnings miss, and we get an earnings beat from Nvidia. Nvidia beats the street. You can see that the earnings in Nvidia have been just basically stair-stepping up. That is pretty much the epitome of what a stair-stepping chart looks like. But interestingly enough, when we look at Nvidia's stock chart, Nvidia's stock price has already been going up going into the earnings. So when the earnings actually came out, even though the earnings were good, it didn't really make too much of a difference because Nvidia's shares were already up so much on this really flawless earnings report. One of the things that a lot of the analysts cited is that the AI revenue for Nvidia has more than doubled. But the question is whether the company has already seen most of its upside. If the company's already seen most of its upside, how much further could it possibly go? And that's pretty much what we're seeing here in the chart. So we did see a big recovery the 2 days prior to Nvidia's earnings. On the earnings itself, initially Nvidia was down, but then in the pre-market today, we kind of saw a reversal back to the upside, and subsequently, things have kind of stabilized from there. But again, the stock is up so much; it is one of the best performing stocks in my recollection. So I'm not sure what the upside is for Nvidia even after this stellar earnings report. And there is a lot of problems still to kind of be dealt with in the world. And that brings us to the next talking point for today, which is the wall of worry update. Okay, there's increasing risk of nuclear war as the Biden administration, the lame duck, I will say lame duck Biden administration, allows U.S. long-range missiles to be used to strike targets inside of China. And I'm not sure why my lighting is changing as I'm not moving. But needless to say, as we see that the Biden administration has allowed long-range missile strikes in China, and what that did was provoked Russia to change its rules of nuclear engagement, bringing the world that much closer to nuclear war. So I'm not exactly sure why the Biden administration would allow this, as Biden will be leaving in 2 months. But certainly this has provoked, Russia into, kind of retaliating. And the threat to the world is now weighing on the markets, as you would expect. So we did have an initial sell-off, just basically on Monday and Tuesday. We kind of recovered a little bit going into the Nvidia earnings. And then, of course, sure enough, we've kind of had a little bit more of a secondary sell-off. However, markets have stabilized going into Friday's trading, this being recorded on a Thursday afternoon. Anyway, the threat to the world is real, and we'll just have to see where it goes from there. So let me just jump to the charts as it's time for our market analysis because we have a lot to look at in the charts today. So let's jump to that. Give me 1 second to get my dash trader up. All right, so we have a dash trader up, and let's take a look. So first one, just going to get this, make this a little bit bigger and put my head off to the side. But needless to say, so here is Nvidia. I'm just going to pull this out a little bit. You can see that Nvidia has been up, up and away. Nvidia just really skyrocketing. Today is what we would call a high wave bar. It trades completely outside of the range of the prior day, and really outside of the range, which is not uncommon for earnings, but really outside of the range of really the last few days. And what that indicates is a lot of volatility. Volatility after a stock has already moved up is usually not a good thing. That's usually a sign for a short-term reversal. And support is kind of far away. Probably the next level of support is 138. But after that, 132. And after that, 116. All right, let's jump into the next one. Let's take a look at Apple, AAPL. Apple looks dead as a door now. Really a somewhat stagnant market. Apple's trading in a range. Not much to say about Apple except there's really not much new to talk about, which probably is a negative thing. MSFT, Microsoft, almost the same picture as Apple, kind of trading sideways in a range, not near its highs anymore. Let's go to Goog, which is Alphabet. Alphabet having a particularly bad day today. The chart on Alphabet is a high with a lower high. So we can see here, there's a high and then a subsequent lower high. Here's a high and then a subsequent lower high. And then a sell-off from that lower high. So so we've seen two neutral charts, which is Apple and Microsoft, and now what we're seeing is kind of a more bearish Google. Now NFLX, Netflix, really skyrocketing into the, this is the Tyson Jay Paul fight. And really Netflix kind of exploding to the upside as they've kind of won the war with Hollywood. And again, Netflix, just an incredible performer as of late, skyrocketing to the upside. AMZN, Amazon, also near all-time highs, however, kind of in the pullback mode. Last but not least, we also saw that there was some action going on with Tesla. Tesla also kind of near all-time highs, back on fire for Tesla. So we've gone through the Magnificent Seven, which is, pretty much Apple, Microsoft, neutral, Google, slightly bearish, Tesla, Netflix, kind of on the bullish side, and, obviously NVIDIA all the way at all-time highs after a stellar or flawless earnings report. Couple of other things. GLD, gold making a little bit of a pullback, a rally after its pullback, after breaking out to all-time highs. Again, we had the Trump rally after the markets broke out. after Trump won the election. Subsequently, we had gold breakout prior to the election. And as the markets broke out to new highs, gold pulled back. Markets are fading the Trump rally. Gold is rallying back up, which is what you would expect it to do. So that is actually trading the way we would expect it. USO, oil kind of stuck in it looks, no, I wouldn't say it's a stuck, but it's definitely trading in a range. But certainly oil is stable, but looks like it might start to peak to the upside as we get into the colder winter months, which is a seasonal trend for oil. GBTC, crypto breakout, all-time highs. We might finally see that 100,000 on Bitcoin that everybody's been talking about for years and years and years. So certainly cryptocurrency is something to watch. How long that move will continue, we shall see. But needless to say, crypto has really had a substantial move to the upside, which is very good to see. Any other stocks? Let's just look at a couple of old economy stocks. XOM, ExxonMobil with gold stable. Ford Motor Company kind of trading at a trading range in a low, in a low trading range, really well off its highs. Ford has been struggling a little bit lately. GM doing a little bit better, trading in the 50s. Pretty steady uptrend on General Motors. U.S. Steel kind of sideways to flat. Okay, so not much going on there. And there is Alcoa kind of trading up near its the high of its range, but certainly the old economy stocks not doing too badly as well. Just to take a brief look, this is the Dow Jones Industrial Average as indicated by the diamonds. Really all-time highs and just chugging along. Anyway, let's jump back to our charts and our slides and wrap things up for today. We are going into the Black Friday holiday season, and we are going to be wrapping things up before the right after Thanksgiving starts Black Friday, and then we have Cyber Monday, and then we are pretty much into the holiday season, which is one of the slowest times of the year for the markets. You mainly have tax selling and really positioning as the end of the fiscal year comes into sight. So last but not least, let's stay up to date with all things DAS. Sign up for our monthly newsletter. Simply fill out the form at the bottom of our webpage. Subscribe to our YouTube channel at Dash Trader TV if you haven't already done so. And follow us on all of our social media, LinkedIn, Twitter, Facebook, Instagram. We will be starting to mention dates for the next number one best trader competition. So look forward to the winter, spring number one best trader competition coming in just a couple of months. So stay tuned for updates on that. Trade well, everybody, and have a happy Thanksgiving.